Good afternoon, everyone from the IBD newsroom. Welcome to Stock Market Today. My name is Ken Shreve, and I'm joined today by news editor Ed Carson. On today's show, we're going to take a look at more new highs for the Dow, S&P 500, and NASDAQ. Also take a look at a pretty good day for large cap technology stocks, but not such a good day for growth stocks. But before we take a look at the day's action, let's go over to Ed. I know he's got three stocks he's going to share with us.
Yes, Ken, thank you. Amazon is one of those big caps that had a really strong day. Some of those specialty discounters had a good one. Ross Stores is one of those. And then Shopify is one of the, Amazon rival, but those some of those software names did not have a great day.
All right, well, let's start by taking a look at a chart of the NASDAQ. First of all, the NASDAQ ended with a gain of about 0.7%. The Dow also up by that amount. S&P 500 led the way, up 0.9%. And small caps, they lagged. They led the market early in the session, but they ended up lagging. The Russell 2000 down about 0.2%. So, Ed, here we have the NASDAQ up at another new high today. Market technicals looking pretty good here.
They do look pretty good. Now, it's really what's spoiled. For the last few weeks, it's been the situation where growth stocks have clearly outperformed the major indexes, in part because big caps, especially big cap techs, underperformed. But today, definitely a role reversal where the indexes look great. Big cap techs and a lot of other big caps did very well. But the growth stocks had generally a negative day.
Yeah. So again, just overall a positive day for the market. So let's go take a look at some three stocks that made nice moves today. First of all, a very strong performance by many of the FANG stocks, names like Amazon, Facebook, Apple, Google, all up more than 3%. But let's take a look at a chart for Amazon here. And what do you like about this chart, Ed?
Well, it hadn't been doing much for quite a while. And what I like is obviously they had that big spike today and rebounded from the 50-day, 10-week line. And you could argue that, you could draw some kind of, trend line there or start from the second one, the second big point there.
Right.
And you could probably draw a trend line from there. You could use this as an early entry. Volume was above normal. So there were some positives. Obviously, you could look at that RS line. That's been dragging down for quite a while. So that's not, it would definitely need repair work. You'd want to start a position, but wouldn't want to go necessarily, in my view, necessarily go crazy on this one and really double down on this because you don't know how well it'll do.
Yeah, Amazon, a good example how you don't all the time have to wait for a stock to finish forming a base. Sometimes you can get an early kind of sneaky entry here. You can see how Amazon took out its recent high right here. And again, this is, generally a pretty decent trend line. This was a breakout over a trend line giving an early entry. All right, so after Amazon, we're going to take a look at some discount retailers that have started to come back to life. And let's take a look at Ross Stores here, ticker ROS.
Yeah, and what's nice here is that it had gapped up a few weeks ago on, this might have been the vaccine day when, so a lot of stocks went up or down on that, and then it formed a base. Now it's formed a base over its 50-day, it's over its 200-day line. So maybe you don't jump in on that first one because you're not sure really what's going on with that, but now it's moving higher. I mean, some of the discounters like Walmart and Target and Dollar General, those were essential retailers. So they were able to stay open, but Ross Stores and some of these off-price apparel chains, they closed down. So they had a tough time. But, if you look at you can look at those numbers, but then if you look at the estimates going forward,
right,
all of a sudden you're saying, well, obviously it's going to be easy comparisons, but it's going to bounce back next year.
Yeah, you can see Ross Stores some pretty big sales declines during the pandemic, but the rate of declines definitely slowing down. Sales only fell 2% in their latest reported quarter. So this is a classic breakout from a flat base here. The buy point 117.87 at 122.62. It's still in that 5% buy zone, so it still looks actionable, right, Ed?
That's right.
Okay, and a bullish relative strength line in new high ground. Okay, final stock we're going to talk about is Shopify. This is a leaderboard stock, a relatively new addition to leaderboard. Nice breakout, but this is one example of many in terms of these top-rated growth stocks that really took heavy hits today.
And what's interesting is that a lot of them sold off again at the very end. Some of them were bouncing back, including Shopify. So even though the market ended at near highs, they really, a lot of them just right at session lows and many or close to it. It fell back to the top of its base. So the real breakout is from the handle there. So it didn't violate that. It's still comfortably, it may have moved back into a buy zone, but it's not below the real buy point. But still, that's just, we saw a lot of that. Some of the stocks were more extended. Some of the stocks were closer to the buy points like this. But definitely, at least for one day, some heavy selling.
Yeah. Ed mentioned the little handle area right here. I believe this was the day when we added it to leaderboard on December 16th, and it made good progress after the breakout. But again, big sellers in the stock today. Not a broken stock by any means. It has basically just retesting a prior buy area, but like Ed said, still holding above this handle entry here. But so Ed, overall, I mean, what do you make of the selling in top-rated growth stocks? Obviously, they've been big winners this year. A little bit of a rotation today? Is this going to be a 1 or 2 day rotation, or maybe the start of something more as we head into the new year?
That's always the question. We've had a lot of those 1 or 2 day moves, and then it goes right back. I think just the question is, how exposed are you to some of these sectors? And maybe, because if it does keep going, how much pain can you take? I mean, if you have another day like this, or 2 or 3 or 4, if you're really exposed to those areas, it can be really damaging. So that's one reason why you may want to diversify your leaders, to have stocks like a Ross Stores, or, an Amazon or a Target, things that are not as liable to all come down at once.
Yeah. Well, we had 24 stocks headed into today on leaderboard. Now we have 21. We got rid of 3 stocks today because of sell signals, but still have 21 that are still hanging in there and fighting a good fight. So one day of stiff selling in the growth stock sector doesn't mean the growth stocks are ready to surrender their market leadership, but we'll see what tomorrow brings. So Ed, thanks very much for the insight as always. And that'll do it for today's show. Thank you very much for joining us. If you haven't checked out IBD Live, our new 1 hour show, I say 1 hour show, it usually goes a little longer than
A bit
1
longer.
hour, but we go on the air just before the market open every day for a solid hour and 15 minutes, sometimes even an hour and a half. But we talk about actionable setups, economic data that's moving the market, and we'll be on again tomorrow morning at 6:20 a.m. Pacific time. That's 9:20 a.m. Eastern time. For more information, you can just go to investors.com/IBD Live. I think I'll get you right to the trial page. So that'll do it for today, folks. I'll be back here tomorrow with Justin Nielsen. Have a great afternoon and evening. We'll see you back here tomorrow.